I have looked at this several times in the past just because it is an income stock. It does pay a dividend yield relatively small at about 1.6%. But it's been a dividend grower as well. So it's come across my screen many times as part of the research for our income stocks. But let's just walk through the financials here and take a look and see if this is a company that we see as a potential buying opportunity. So PetValu Holdings, PET on the TSX, trading at about $24.50 per share, 1.7 billion market cap. As I said, a yield of 1.6%. And this is Canada's leading realtor of pet food and pet related supplies. As Ryan said, over 750 corporate owned stores or franchises across the country. They've been in business for about 40 years, so long track record. Now, if we look at the company's share price performance over the last year, we can see some pretty big declines in 2023. So it started the 12-month period off in the $34 range. It reached a share price of about $42 at the start of the year, but since then, pretty much straight down to about $25. And this is a relatively new company in the public market, so it just started trading publicly in 2022, and really a lot of volatility. Had a fairly good run from its IPO date in June of 2022 up till, as I said, early of this year. But since then, it's just been straight down back to below its initial IPO price. So, of course, the first thing we want to do is see, well, how is this company performing financially? Are they growing? Are they making money? Certainly, it's a profitable business, but the financial results in the last quarter, Q2, were a little mixed. Revenue performed well, up 12.5% in the quarter to $256 million. Adjusted EBITDA, lower level of growth, 3.9%, up to just under $54 million. And we did see EBITDA margins decline. They were 21% in the second quarter of 2023, compared to 22.8% in the same quarter last year. And then earnings per share of 36 cents, down 7.7%. So just walking through the management commentary, the company produced same-store sales growth of 6%. Management said this was both due to higher prices as well as higher level of traffic coming into their stores. They did open 7 new stores, and ended the quarter with a network of 758 stores across the country. Now, one of the factors that impacted the company's bottom line results was the interest expense. So net interest expense for the quarter was $7.2 million. That is an increase of $2.6 million compared to the same quarter last year. And of course, this was driven by higher interest rates. So looking forward, the company has put out financial guidance for the full year of 2023. They're expecting revenue growth of about 11-12% compared to the previous year. And that would be driven by same-store sales growth between 7 and 10% and about 40 to 50 new store openings over the course of the year. Adjusted EBITDA is expected to be up just under 9% at the midpoint of guidance, and adjusted EPS, roughly flat to about 4% growth. So at the midpoint, 2.5% growth from 2022 is the expectation. Now, looking at the company's balance sheet here, they have about $658 million in debt. Not a lot of equity, about $34 million in equity. So that debt to equity ratio is quite high. Now, equity is really an accounting term, so it's arguable how much we want to depend on this ratio to really assess the company's balance sheet. But generally speaking, we generally don't want to see equity at that low of a level. But the more important metric for us is the debt to EBITDA, which in this case is about 2.8 times. I think that's fairly reasonable, given that this is largely a brick and mortar company, which is fairly capital intensive, and it's a fairly defensive industry as well. So we should have good visibility in terms of future revenue and cash flow. And then finally, valuation. So at that $24 share price and the midpoint of 2023 guidance of $1.63, the company's trading at a valuation about 15 times. This is a fairly attractive valuation considering some of the positive fundamentals of the stock. So what is our take on PetValu? We like that it's a strong brand. They have a leadership position in a market that we would consider to be defensive. And the low valuation, the P multiple of 15 times, is certainly a discount to the overall market. relatively good valuation considering that we do have revenue growth from PetValu, and it's a fairly stable company. On the negative side, we aren't really seeing much in terms of earnings growth. Now, the company has a very limited history as a public company, so this is something that we'll keep an eye on. But earnings growth really expected to be lackluster this year, flat to maybe up a couple percentage points. We did see pressure on the EBITDA margins. So our take right now, we think it's fairly valued at the current price. There is some things about the fundamentals that we find attractive, but we don't see any hurry to purchase shares. We're just going to continue to monitor right now.
Yeah, a good summary. I think it's an interesting company. If you could, if their guidance was for 15% revenue growth next year and EPS of 15 to 20, it'd probably be a company we'd really seriously
Oh
consider.
yeah,
But
yeah.
it's probably not there right now. It may be a year of flat to slightly down, but if the share price stayed in the current range and potentially traded lower, and then we got indications that are going to return to 12 to 15, 10 to 15% revenue growth and a little bit higher profit growth, it might be a situation that we'll look at. But it certainly is eye-opening, and again, we've seen this on many companies when you look at the interest expense there and how it's significantly increased for these companies, and that will eat into profit growth in the near term, and if rates stay at those rates, it's going to continue. So that's something, a lot of companies took on a lot of debt over a low interest rate period. A lot of that is floating rate debt or adjustable rate debt, and they are seeing the impact of higher rates right now, and we're seeing that on profitability. It's something you got to monitor very closely when you're looking at these companies, for sure.
Yeah, and there's another company too, which I actually saw a headline. It was a Forbes article talking about Petco. So I think they're Woof, WOOF on the NASDAQ. And the same thing with them. They actually ended up coming out and saying that earnings, or, they came out with earnings guidance. They said that they're going to be missing it. They're talking about a lot of head count reductions that they're going through to try to ramp up profitability, just because, again, they're also going through depressed profitability right now. I don't know what the interest expense is or what their balance sheet looks like, but it's just another kind of similar thing, that troubled profitability here. And then as well, I know Ryan spoke about it before, but the amount of people that were getting dogs and cats during the pandemic. So there's kind of a boost, in 2021, 2022, that, we may be coming off of a bit. I mean, people are still obviously needing to buy those, pets that they've got in 2021 and 2022 food. Because
you would think that. I mean, that's what I heard. You think they have to keep, but there have sadly been a number just either, let go. They're walking the streets. I'm not sure what happens to those, or they maybe been euthanized. I'm not sure. But there's certainly a decline it seems like when you're looking at a company like PetValu in likely ownership, and it may be people just saying, oh my God, I didn't know a dog or cat or whatever a gorilla or whatever they acquired during the pandemic. It's work that I have to do this.
Yeah.
And now I have to go back to work too. And they don't have the animal anymore.
Yeah, I've got kind of a sad story. I mean, this was nothing to do with the pandemic, but one of my childhood friends, I won't say his name, he ended up getting a gerbil. And, I was his best friend at the time. I wanted a gerbil so bad, but my mother, Colleen, wouldn't let me get one. Thank you, Colleen. Good choice. And my friend's mom, she was sick of taking care of this gerbil. So she just let it out in the wilderness. And it's just like, you're not supposed to do that.
Run free, gerbil, run free.
It probably
Name and shame, Brennan.
Probably only made a couple hours of that
names.
day before.
We need names, Brennan.
I will never spit names.
One other point that I'll make about a PetValu here that should also be considered. I do believe that it is a defensive industry, the pet food and supply space. One of their brands is Bosley.
That's a good point.
My grandfather actually owned a Bosley store and operated a Bosley store back in the 80s.
Wow.
And one of the things that he mentioned was that you don't really make a lot of money off of the food. You make most of your money off of the accessories, right? So if we do come into a period where, people really have to kind of tighten their belt straps and watch their pocketbooks more, it's conceivable that certainly there's going to be less spending on the accessories, right? Like you may have to feed your dog or your cat or your pet, You don't necessarily have to buy like the premium brands, and you don't necessarily have to buy all the fancy accessories either. So that's another thing to consider.
I gotta say, there's a lot of accessories around here for the dog, and we could pull back on that at some point. I'd be okay with it. Oh, I'm terrible.